You're with us here on BTTV. Let's take a look at the markets. At this hour, we still got a bit of a negative bias that we're trading at. Sensex is at about 61,618 right now. Nifty is at about 18,296. So we've been hovering really at this mark, through the session and through the week really. And today, still just below that 62,000 mark and trending above 18,000 on the Nifty, but no major gains or no major shift in trend that we've observed. The Nifty Bank is about flat today. Mid caps also down by 0.5%. Currency just a marginal downtick at this point of time that we're looking at. Let's take a look at some of the major gainers and losers as well for you and see what kind of trends are emerging there, if any, and which are the heavyweights that are lending some amount of traction in trade. Pull those up for you on your screen in terms of what's catching our eyes so far. Top loser would be M&M. Top gainer is HUL. So continuing to see traction when it comes to those FMCG names. SBI, HCL Tech, some of the others there on the plus side in today's session so far. But advanced decline ratio is tilted toward the negative right now. It's, but even if there aren't any major cuts, but it's still definitely with a slight negative bias. Kotak Mahindra Bank still up about 0.5% today. HDFC seeing some amount of recovery, as you can see there on your screen. So those are a couple of the other stocks that we could point out. Tech steady in today's session so far, although TCS is seeing a little bit of red there on the screen. But let's talk about HUL. Mr. Prabhakar, thanks for joining us on the show. Good to have you with us. I wanted to bring up some of these names that have seen consistent run-up, and FMCG is back in focus, whether it be ITC, Britannia, and for some people, HUL. What's going to be on your radar when it comes to this segment of the market? Do you have any concerns, with the possibility of, further pressure on those crude prices, or would you still continue to see potential in some of these heavyweights? Hi, Mr. Prabhakar, can you hear me?
Yeah, I can hear you.
Okay. Go ahead. Go ahead. I was asking you on some of those FMCG names.
Yeah, I know FMCG, it has been underperforming the market, but selectively, yeah, we like few stocks in FMCG sector. ITC is one where we find lot of value still after a good rally. No, but still, I think growth in ITC is going to be very good. Britannia is one more space, but there are few pressure point in FMCG. So performance will take time, but for a long-term investor, no, FMCG is a very safe but a low return sector if you take it, but high returns will come from ITC and Britannia.
ITC and Britannia, those are still the preferred names there as far as Mr. Prabhakar is concerned. Mr. Prabhakar, what is, on your preferred list? Rather than me go through a bunch of those segments, I want to first get what's top of mind for you. Where do you see the maximum potential right now? Are you looking at the broader markets? Are you looking at individual names? Are you spotting certain trends?
Yeah. So no, we have done one small study. For year till date, if you see the advance decline ratio, declines are more than the advances. 268 stock has been declining for 232 stocks which are advancing for Nifty 500. I've taken the top 500 stock where the declines are more. Even month till date, the declines are more. 260 stocks for 240 stocks. That means, people are not making money this year compared to the last 2 years. So that is where, retail people feel that we are not making money. But I think, whenever market has come near the all-time high, no, this has happened. So last 3-4 months has been very bad for a overall market, but there are pockets of performance. In that, we like PSU banking. Today, the data we saw that credit growth is 17%, whereas deposit growth is not up to the mark. So there, PSU bank will have a major advantage. So there, we like Bank of Baroda, Canara Bank, and State Bank of India as a top pick. So I think PSU banks are likely to give very good return in the next 3 to 6 months.
All right, so PSU banks. Any specific ones you want to talk about there, Mr. Prabhakar?
So, I think Bank of Baroda, the fourth largest bank by way of credit, I think that is one stock. We think 200 rupees in next 1 year is possible. So there, there I think the returns can be very good. So, but even small private banks like City Union Bank and Federal Bank are also there in our list. But if you want larger private banks, then Axis Bank and ICICI Bank or two stocks where we like, and banking as a sector is likely to outperform. Crude has cooled down, inflation is also cooling down. So I think outperformance in banking sector is something we like at this point of time.
Okay, so banks is definitely something on your radar. Okay, let's take a look at the broader markets. India's real estate is up about 6% today. Actually, that one catches your eye straight away when you look at some of those gainers out there. Real estate, Mr. Prabhakar, is that and discretionary, spends really as as we've been seeing traction build up. Would you be bullish on real estate, or would you feel that again that's a segment that perhaps hasn't picked up the way you anticipated over the last few months?
I no real estate has not performed. If you
Yeah.
really see it, and whenever India is in a sweet spot, and real estate will have a lot of legs to run. But there you need to have 2 to 3 years view or more than that to make money in real estate. We like the space, and interest rate rate hike will not impact because the loan book is going to be 20 years or 15 years long term loan. So whenever interest rate drops, it will automatically reflect there. So I think real estate is likely to do well. No, so there we like Oberoi Reality. No, IB Real Estate has rallied today, but I think if the merger goes through, then that is one more stock to watch out for. We like Kolte Patel in a very small space, and we like even DLF, bigger real estate space, Godrej Property. No, these stocks have corrected, so it makes it even more attractive for a long-term investor.
Okay, fair enough. What do you feel are the pockets in the market where perhaps we're still seeing valuations attractive, industrial, cyclicals? I mean, we've seen a run up, but where they're still looking like, potentially, offering opportunities for multiple returns going forward.
I think defense is one place where the lot of potential are there. The defense stocks have doubled in the last 6 months to 6 or 8 months. But if you see their order book, I will give an example of Mazgon Talk. They have an order book of 44,000 crores, and their last year revenue was only 5,700 crores, and the management has indicated that this year they will make a revenue of 7,500 crores. Still, and they are saying, they have a eligibility to get another 40,000 crore order book. That means you have a visibility for next 7 8 years. So these are stocks where things are changing. No, and our defense budget are likely to increase going forward. We are nearing a budget. In next 4 months we will have our budget session also. So I think defense where previous allocation was 1,52,000 crore, where 68% was meant for make in India, that is likely to move higher. And with geopolitical tension, make in India will be a concept. So we like PSU defense pack. In private, we like Bharat Forge the best.
All right. Okay, Bharat Forge. Auto is taking a bit of a nosedive, but let's come back to that for a moment. Sakshi is joining us, taking a look at some of those PSU banking names. In fact, the only index that ended in the green, in an otherwise was close to ending in the green and otherwise weak market. Sakshi, take us through what's driving that traction there.
Absolutely, as you pointed out, right? Because defying the otherwise subdued trend in the markets, Nifty PSU Bank Index was the only green mark in the sea of red. Otherwise, that we've seen on the last trading session of the day, up by 1.4% odd. Now, within the constituents, we saw Bank of Maharashtra was the top gainer in the pack that rallied up to 11%, to in fact hit a fresh 52-week high of 25.6. The other top gainers from the PSU bank stocks included Indian Overseas Bank, Central Bank of India, UCO Bank, Union Bank of India, which all of them rallied up to 5% each. Now, on the back of this rally, we've also seen PSU Bank Index hit a fresh 52-week high as well. And what is actually leading to this upside is that experts believe they have been running ahead of its private peers amid the improvements in asset quality. There's the corporate loan book and the operating performance that's all driving the rally in the PSU banks. Now, given this ongoing rally as well, there's one more point that we actually saw today. There was a government notification that was issued that has now increased the maximum tenure of the MDs and the CEOs of the public sector banks as well to 10 years from 5 years earlier. Now, this move is expected to help the PSU lenders also retain talent going forward from here. So that's another major move, sentiment booster that actually was behind the rally today. In fact, Global Brokerage House, Bank of America Merrill Lynch, Impact Securities has also issued a report saying that the turnaround in PSU banks has also many legs beyond the largest lender, SBI, going forward from here.
Thanks for that, Sakshi. We'll also go across to some of those buzzing stocks with Tanya shortly. But let's come back to some of those auto names. Mr. Choglingman, today again a little bit of pressure that we're seeing is particularly on the two-wheelers. Do you think they're going to come back, or not so gung-ho on the future for some of the two-wheeler names?
No, two-wheelers, Bajaj Auto and Hero Motor, we are not very positive on. TVS, if it corrects, there is an opportunity. They are doing very good, business-wise. So I think TVS Motor will be our top pick in two-wheelers. But coming to Bajaj Auto and Hero Motor, there is a pain point. I think till there is no recovery, we will avoid it. Now in auto, there are other space where we are very gung-ho about it. Ashok Leyland is one thing. Mahindra, any correction is a good opportunity. Even Maruti we like. So why to concentrate on two-wheeler where growth is lagging and rural stress is still visible? So we will avoid that space.
Okay, let's also listen in to the view coming in from Ramdeo Agarwal, chairman and co-founder of Motilal Oswal. He spoke to Rachna Dhanrajani on the future outlook of the market. Let me see if we can bring up that excerpt for you.
I'm joined by Mr. Ramdeo Agarwal. Mr. Agarwal, if I could start by asking, domestic equities look set to hit fresh record highs. What is your outlook on the current market scenario, and what do you look forward to?
Yeah. So clearly, the indices are telling you that we are most resilient, not only economy, but also in the stock market is clearly visible. And this is the power of retail. The retail will not allow the market to go down, and FIs, they're watching retail. So they're scared of retail power. So, and the country's own standing. So I think they will be there'll be some time coming, sometime they'll be going. But I think the downside is limited, upside is pretty good. That's what I can say.
So would you call for a caution in the market investing?
Investing is always cautious approach. I mean, you cannot be reckless. I mean, I'm not about speculating. In investing, you have to be cautious. But if the market helps you, market is giving you tailwind for people to make money. So let's see, the next 4-5 years.
So in 2022, India outperformed all its global peers. Do you see this phenomenon going forward?
I mean, it's very difficult to speculate anything and forecast about the economy and all. In any case, I'm not an economist. I'm just a stock picker and an analyst. So we go about, looking at the markets are reasonably priced. It's not cheap for sure. Reasonably priced, and I would say it is a little expensive by my own experience. My problem is I have seen 40 years of the market. The younger kids who are actually ruling the market, they have not seen a very underpriced markets. So for me, it's kind of a bit pricey, but I think the market itself will play out and markets will remain firm.
So we're very close to the budget. Do you think from now till the budget, what would be the market trigger?
No, what you have seen, markets are firm. Markets will remain firm. And see, what is going to happen to earnings? Don't bother about anything. Earnings this quarter was a bit lower than what we thought, more like 850 rupees types. But my analysts are saying that earnings are going to be on track to deliver 830, 835, and next year 950, 970, and things like that. So if that outlook remains intact, markets are going to be in good shape.
Considering that, what's your preferred sector pick for 2023?
Don't get into this because it's a long thing. Okay, thank you very much.
While the broad outlook remains positive, Mr. Prabhakar, what do you feel is a near-term outlook for the markets? We're ending, nearing close to year-end, and at a time like this, after we've already seen these high levels, nothing much has changed in terms of global environment, everything's still poised, a little tense. What do you anticipate in terms of the near-term environment, next 3-4 months, let's say, just pre-budget?
No, that is slightly going to be a bit difficult. And whatever we have observed till now, there is one key takeaway where market has been selectively participating. We have seen defense related stock doing outperformance in the market in the last this calendar year. and it has happened in banks also. So even capital goods have outperformed. So this outperformance sectors, wherever there is outperformance, we have seen that's those sectors will still outperform, but the underperformance will lag the market. Most of the recent IPOs have done very badly, and they are likely to drag the more also from here. So there, people have to be a bit cautious. IT, I don't see a outperformance coming, immediately in the next 3-4 months. So that sector can be avoided. But you have few sectors which are emerging where QSR is one more space we like. Hotels is one more space we like. So if you are sector specific, then I think in the next 3-4 months you concentrate on these sectors. There are chances that you will make better money.
All right, Tanya is also standing by with a look at some of the other buzzing stocks today. Tanya?
Absolutely, Aabha. So, first of all, Nika shares are trading in the green today in an otherwise weak market. So, ever since the company's pre IPO locking period expired, investors have been diluting their stakes. High net worth individuals like Narotam S. Sheikh Sarai and Mala Goikar and funds like Lighthouse India have sold part of their holdings in the company. Stock was down to the tune of 7% yesterday. However, it was back in the green today and even jumped over 6% in the early trade. Paytm is also up in the trade today. On Thursday, remember, SoftBank sold 29 million shares of Paytm through a block deal. The stock ended 10% lower. And post the latest transaction, SoftBank's shareholding will decrease to 12.95% from 17.45% stake in the company. Now, it is interesting to note that according to a latest report by JP Morgan, so basically, JP Morgan has maintained its overweight rating on the stock with a target price of 1100 rupees. And it said that the scale up of the lending business is running ahead of the plans despite its focus on credit quality. Also, our Systems International shares have rallied 19% in the last two sessions after private equity firm Blackstone said that it would buy 52% stake in the digital information technology service provider for almost 2,904 crore rupees. Now, Blackstone would buy the stake from founder Satinder Singh Rekhi and the other current promoters, and the transaction is likely to be completed in the upcoming months. Now, Strides Pharma were also up to the tune of 2%. The company announced that its subsidiary Strides Pharma Global Singapore has received approval for potassium chloride oral solution, and the products will be marketed by Strides Pharma in the US market. Lastly, shares of Bajaj Healthcare were also in the focus today. They were up around 2%. Now, the pre-approval inspection of US FDA has been completed successfully with 483 observations of the manufacturing facilities of Bajaj Healthcare. So that is a big positive for the company. Back to you.
Okay, thanks for that, Tanya. Pharma names, Mr. Shoklingam, any of them on your radar? Mr. Prabhakar, sorry.
No, pharma, I think, we are a bit cautious on pharma, and we don't track pharma very actively, so I won't be able to comment on pharma.
All right. Any of the other stocks that you'd like to talk about from the mid-cap basket that you feel that perhaps have performed as you anticipated, where earnings were in line with expectations?
No, I think railway stocks, the PSU railway stocks have done very good. RVNL, Ircon, and the expectation is, this budget, the focus will be on railways and defense. So these two sectors are doing good. So if we are looking at next 3-6 months, then any correction would be an opportunity to buy these sectors, and these could do very good. And if you are a long-term investor, chemical stocks have corrected due to multiple reasons. But many chemical companies have been on expansion fear, so that is going to benefit for a long-term investor when you have a very good capex. So we like chemical stock where capex is in a big way. So that is one sector we are looking at.
All right, let's take a look at some of the other movers in trade. Mr. Prabhakar, thanks so much for joining us. They'll just wind up now as we count down to close on the downside. And I'm just taking a look in terms of some of the buzzers which were cooling off. Glenmark, Delivery today, 4-5%. Engineers India, Mastec, Chalet Hotels, Sarah Sanitary Ware, Kalyan Jewelers, Laura Slabs, Kansai Nerolac, a couple of these paint names as well. A lot of these consumer auto, paints, A lot of these segments that would require discretionary spends were actually, lower in trade today. Muthoot Finance, Quest Corp, GNFC, PI Industries, Intellect Design, Cochin Shipyard, Sonara Software, Manappuram, as I mentioned, 4% down, Cient, KRBL, Hoodco, 4% down on some of these as well. So lots and lots of names that also didn't really perform today. But on the upside, we saw an IFB Industries that was up 13-14%. We had Bank of Maharashtra, which was up 8-9%. Enables Real Estate, which we were discussing, Nazara was up 7 to 8% in today's trade. Graphite India, IFL Finance, HEG, Go Fashion, Sterlite Tech was up 4-5%. IDBI Bank, Birla Soft, Rallis, a couple of the other names there that were also looking good. So nice mixed bag coming in. Bank of Maharashtra was up about 8%. Got to pull that one up for you. PB Fintech was back up today, 8-9% on that one. So PB Fintech, Nazara, Bank of Maharashtra. Then you had names like HEG, Affle, which were performing. Blue Star was up 4%, IDBI Bank, FSN E-commerce recovering a little bit today. PNB, of course, we were discussing a whole host of those PSU banks as well. Max Healthcare decent, about 2%. G Shipping was up about 2% or so. Interglobe also on the upside there, and a few other names as well. And on the index itself, let's pull up some of the major gainers and losers. We've been discussing them, of course, but today's little bit of pressure. Reliance was just about flat. TCS also minor downtick. HDFC Bank also minor downtick coming in. Bharti Airtel has been consistently sliding a little bit. Bajaj Finance also looking weak. Auto as a whole took a little bit of a hit. Maruti was down 1.5% in line with some of its peers. Titan also continuing to trend a little lower, and M&M was down 2.5%. The names that stood out were probably an HUL, which we were discussing earlier. Asian Paints, again steady. HCL Tech has also remained steady. And yeah, so those were a couple of the names that managed to really stand out in today's trade. So overall, if we take a look for the week for the markets as well, it's been a pretty steady trade over the last week, but on the downside more or less, but no major cuts or no major downtick. But nonetheless, it's still been a little tepid, so to speak, in the last few trading sessions. We'll wait and see what are the cues the market tracks. But lots of big moves coming in on certain stocks like a Nykaa, like a PB Fintech, for example, that have had their own individual triggers and have seen quite a bit of traction this week as well. That's where we leave it on the show today. Thanks so much for watching.
From the makers of Aaj Tak and India Today, the undisputed leaders in Indian news, we understand news like no other. Trust 30 years of leadership and 100+ years of editorial independence. When it comes to decisions that affect your finances, trust only Business Today.
The government is expected to slash its disinvestment target next financial year. With the current market conditions not exactly favouring the sale of government enterprises, the Finance Ministry is likely to set the target at around 30 to 35,000 crore rupees. The target was 65,000 crore this year and is unlikely to be met despite the big-ticket LIC share sale. For more on this, we're joined by BTTV special correspondent Karishma Sudani.
Well, Aabha, right. In fact, it's one of the most important aspects that is going to be a part of the finance bill, and that is disinvestment. At least for the past 3 years, and the action has been quite, I'd say, elevated when it comes to selling of assets to tribal players by the BJP government. Now, what we're picking up from our sources is that government may actually peg a really low target of close to 35,000 crore, which is almost half of even what the current target is. A year back, they had they had focused on a really elevated target of close to 1,75,000 crore, which of course they were not able to fulfill. Also because of various reasons like the pandemic, and this year 65,000 crore, it's unlikely that they'll be able to complete and achieve that until March. BPCL being off the table and LIC not fetching them as much as they expected has been not worked in their favor. So a low target next year, and with IDBI Shipping Corporation and Concor, it looks like the government wants to keep target low, but will probably is wanting to exceed expectations since everybody has started measuring the whole Disinvestment Act exercise by the target.
Incredible scenes of anger on the streets of a major Chinese city, of frustrations bubbling over. An outpouring of resentment against the draconian measures taken by officials in a city more than